clear of the cold, the COVID, the climate, everything with a C. Stay close to chocolate and keep yourself warm and keep yourself healthy. Today's topic, very controversial. And if I say controversial, it's controversial when not implemented correctly or not accepted correctly. But a credit policy, in my view, is like a robot. And every now and again, I go through some major intersection. And one that impresses me the most is out there in the east, close to the Greenstone Mall. There's about 5 or 6 different directions that vehicles can come from and vehicles can cross one another in this intersection. Now imagine that everybody coming from a specific direction at the same point in time decide that they're going to ignore what that light is telling them at that point in time, whether it be green, whether it be orange, whether it be red. It will be total, utter chaos. It might end up in death, might end up in some serious accidents. I've seen that robot go out, and it is chaos. There's at least 4 or 5 traffic officers trying to direct that traffic and to get them back into a situation where it's controlled. But it creates chaos. Now that is a business without a credit policy. Credit policy, in my view, is probably the most fundamental document that any and every business should have if they engage into selling or servicing goods, or giving a service on terms. Why do I say that? First thing that it does, it creates stability. Stability in the sense that everybody understands what the rules are, the rules of engagement. But where and how would a policy be implemented? First thing that must be done is when a policy like that is created, it must be done in cohesion with the whole business. Everybody should have input and understand and be a part of the decisions as to what will be captured in this document. Once that is done, the implementation must start from your C-suite. That's one of these new grabber words that people use, but I just call it your executive, your CEO, your CFO, and your COO. If they buy into the credit policy and they understand the necessity and the controls that it will bring into your life, and the stability and the accountability and the responsibility, and they drive it, I can assure you the life in your credit world to your customer and in your business will be so much smoother and so much more controlled. So, the very first comment I made is that it creates stability in your business. Why would I say stability is brought in by a credit policy? The reason behind saying that is that when there is a specific rule or specific guideline or specific thing that tells you what you need to do before you can action anything, then it creates uniformity with everybody as to what is going to happen and what is expected to get to that outcome. Back to my robot. When you're approaching the robot and it's red, you stop. Oh, I've seen some dangerous drivers that goes through a red light, and I see it quite often these days. And I think to myself, do they understand the consequences if someone coming from the other direction sees that the light is green and decide to go through that just as fast as they just went through the red light? It's not just going to endanger their own life, it's going to endanger that person's life. And so with a credit policy, a good structured credit policy is probably one of the best documents to give to anybody that starts in your business. I remember years and years and years ago when I started the business, they had this whole induction week when you started at the company. And they give you a whole wad of documents and things to read and pamphlets to go through and make yourself acquainted with to understand the business. If a credit policy was there and is part of that procedure, and that person then signs and acknowledges that he's read the document, understood the document, and is going to abide by that document, there will be no need down the line to remind people of the consequences of it. That document should drive your business in such a way that everybody understands the consequences of not abiding by it. I had the privilege in the last business that I was with, that to get it to at such a stage that should you at any point in time, without the authority, break the rules of the credit policy, you would have been dismissed. As simple as that. Same with a red light. You drive through a red light and a traffic officer is on the other side of that red light. Guess what's going to happen? He's going to stop you and he's going to fine you. And it's going to cost you some serious bucks. And I've seen lately now they're talking about this point scoring system that you lose or you get points against your name for certain offenses. Going through a red light is going to be a serious offense. And I think, and it's my view, that a credit policy should be deemed in exactly the same way. Why do I say that? Because it controls the lifeblood of any business. Cash out, cash in. If that is not controlled, and if that is not created stability right from the word go, you are very much going to set yourself up for a slap sooner or later. Accountability is brought into place because the policy will be created in such a way that everyone will understand who makes decisions, at what level, and when. Who has the authority to, if needed, a credit policy can be overridden. I was in a conversation recently when I heard someone making mention that salespeople have the authority to override a credit policy. That to me was a shock to my system. Firstly, they're not the owners of such a document. They should not have the authority to do that. In my view, the only person or people that could override a credit policy should be the head of credit or the CFO or CEO. Not even the COO, because he's operationally bounded and would favor the operations to get something done. If you do not have that control, then that document means nothing. So if your policy is not driven from the top down, you might as well toss it out the window, because you are going to have people overriding that document on a frequent basis or challenging the authority of the document on a frequent basis. If there is clear responsibility and accountability, it gives direction to the business, right from engagement. So if your sales team are au fait with how to onboard a new client, what is required, when is it required, why is it required, and they understand the need of these various documents driven by your credit policy, they will not question you. They might challenge it once or twice, but thereafter they will know that an uncompleted or a not signed credit application document or a service level agreement will lead to a no for an opening of a new account or the approval of an increase on a credit limit, because it is driven not just by us as a business and us by our credit policy, but it's also driven by certain laws and regulations when it comes to legals. When you have to take the client to court, a document that is not signed means nothing. And what and where on are you going to stand, and what terms and conditions are you going to implement or apply if the document is not accepted? This is clearly stipulated in the credit policy. And when that person engages or onboards in your business and he understands the rules, or she does, then it makes it so much easier to enforce and abide by those rules and regulations. It avoids confusion. If it is clear that up to a certain level, certain people makes the decision. If it is clear who signs off a credit note, if it is clear who can increase a credit limit, if it is clear who can approve a certain account, if it is clear as to what securities might be needed or what documents are required. Spoke to someone yesterday and said, if anybody opens a new account with them above 150,000, they want financial statements or management accounts. Clear. I said to now, does that create constraints for you? And the person answered me, in the beginning it did, but now it's clear to everyone. They don't even bring a new application without those documents. Easy, very much controlled because it's driven by a document that is accepted and signed for by everyone. It's auditable. Your auditors come and say, what is the controls that you have in place? If those controls are adhered to and controlled and listened to and is documented, everybody will know and understand, and the auditors will have such an easy job when they walk in as to say, what is the processes around a new account? So there's the policy. And then they can audit the process and say, okay, let's check when you opened a new account, what was the process? Yes, there it is. There's the credit application. Yes, it's signed. Okay, there is the necessary documents that we require. Is it a bureau report? Is it audited financials? Is it bank statements? Is it a securities that is required? Whatever is required is then found easily and attached, whether it is electronic or whether it is manual documents, hard copies, it's there and it is followed strictly according to the policy. The same with credit notes, the same with increases of credit limits. It is auditable and it's driven by a credit policy. If it's then found that someone has stepped out of line, what was the consequences? And it is easily then once again manageable and controllable. It creates structure. If there's a credit policy, everybody in the business understands what it is that manages and controls credit in your business. How is it engaged and how is it closed? From the beginning to the end. With the new ECL rules and regulations, expected credit losses, for those who don't understand the acronym, it is important to have that enclosed into your policy as well, so that everybody can understand how and when will your expected credit losses be calculated. If you credit insure, put that into your credit policy so that people can understand what it is that drives certain decisions. If you abide strictly by the credit limits that is granted to you by a credit insurance, then stipulate that in the policy so that everyone knows that you can't exceed that credit limit. I also heard the other day that people go over those credit limits. Do you understand the consequences? If that is stipulated in your credit policy, then they will understand what the consequences are. Just to touch on that, if you credit insure and you go over the credit limit, the credit insurer, once that account goes into default, collects their accountability. With other words, let's for instance say they give you a credit limit of $1 million and you deal to 2 million. And they now engage in a legal action against the client because the policy stipulates if this client goes into protracted default, as they call it, or with other words, they don't pay you, then you must hand the account over to them for collection. So now they start collecting. They only collect their accountability, their $1 million that they want to go or would have lost. The other $1 million is going to be your problem. The legal expenses that they share in the same proportion as which they insure you for is going to change because you have overexposed yourself according to them. And therefore, you have now got a different responsibility. They might even adjust the credit insured percentage that you have been insured for. So if that is not clearly communicated to everybody in business so that they understand what is going to happen if those rules are broken or if those guidelines are stepped over, then there is going to be some serious financial consequences for your business. And at the end of the day, who are they going to point the finger at? the credit person. They're going to say, you're in charge. You are the one that's supposed to guide this. You are the one that's supposed to control this. I know it's not always easy when, especially if you have a policy or don't have a policy. I remember when I started the business where I was before, there was no credit policy. Didn't even know what it was. There was no credit application. Sales opened the new accounts willy-nilly as they felt like it. And this all of a sudden new thing that was starting to come into space created a lot of friction. But once they understood what it was there for and how it was going to assist the business, it was accepted and driven from the top down. Minimizes risk. I didn't say it avoids risk. I said it minimizes risk. Because there's a lot of businesses that we don't always see what is coming. I think this COVID situation has just proven that. But it helps you to mitigate and minimize your risk. If there's a guideline, a rule, an accountability, a responsibility, everybody understands who does what, when, where, and why, which is so important. There's controls in place. If there's no controls in place, if the robot doesn't change color, it's going to continually cause frustration. And I think it is very clear that the South African drivers are probably some of the most aggressive drivers in the world. So if you intersect into one of those major intersections and you start doing stupid things, be assured someone somewhere along the line is going to take you off the road and give you a couple of slaps. Some might even pull a gun out on you. We've seen it in the newspapers on a regular basis, people shooting at one another. What do you think is going to happen in business? Exactly the same. It's not someone's going to pull a gun on you, but someone's going to pull a fast one on you and cost you some serious money. And if those rules are not very clearly stipulated as to how you investigate the accountability and responsibility of your new client and where they are and where they come from and who they are, then you're not going to have clear guidelines as to how your risk is going to happen and what is going to happen. Now, even more now that people are working from home, majority of them don't have an office anymore. They're spread all over the place. How do you understand and how do you know where they are and what they're doing? And if they are really who they are or say they are? What should be in a credit policy? I personally feel that every single function that happens in a business that has got anything to do with credit should be documented as to how it happens and the accountability and the responsibility thereof. I hear so many times that credit control departments are doing credit notes. I don't understand that. I think the accountability for that should be where it comes from, where it originates from. So if someone has created a cause of a credit note, they should do the rectification thereof. They should feel the pain thereof. A credit note being done by a credit controller can only create problems for you because it leaves you up to a situation where they're going to start, and I don't say, please don't misunderstand me, I don't say all credit controllers are scaly, but they're going to use that opportunity to clean their accounts, abuse the process. But if you hold the person accountable who loaded the wrong price to do the correction and get the credit note out and get the new invoice out, or the purchase order that's not there, credit the invoice and get the purchase order number, whatever the reasons are for this rectification or correction. If that is not controlled by the policy, then you have problems. If your engagement is not controlled by the policy, you have problems. If your levels of authority is not controlled by the policy, you're going to have various different people making decisions and engaging in things that is not correct. And then you're going to have problems as to trying to understand or control it or fix it afterwards and saying, who gave you the authority? Why did you do this? Who said you can do that? And the answer will always be, I didn't know, or I didn't understood, or I misunderstood. But if it's clearly guided and controlled by a credit policy, which is accepted and driven and signed for by every single person in your business, confusion will never exist. It can control your reviews. It can control your KPIs. Key performance indicators. Very easily controlled by. This policy guides every single activity in your business. If understood and implemented, a KPI will be a walk in the park. Then the only problematic areas will be the collections, the DSO, the percentage of collections, or anything like that. It can eradicate your business from inefficiencies. What do you mean, Martin? If it is clearly stipulated that you cannot do a delivery to a client who requires a purchase order before you invoice him, then that's it. You control it that way. If the person don't abide by the rule, they are disciplined according to the policy. Easy, eradicate your business of inefficiencies. If an invoice is raised without the necessary authority, the person can then be disciplined. But if that is not properly documented in your policy, then of course you'll set yourself up for some interactions or problems with your debtor. It helps your administration processes because it's clearly guided and controlled and stipulated as to what happens, when, and why. Everybody needs to understand. They don't even bring a certain document for a certain person to do a certain activity on it if it doesn't have the necessary authorities, signatures, a company's documents, or whatever it is for that to initiate a new process or a new decision on anything. The laws. We have the National Credit Act, we have the Consumer Act, we have the POPI Act, and we so can go on. And all of these certain documents and rules of the government have certain implications in our business. Those should also be stipulated in your credit policy so that everybody understands what it means, for instance, the protection of personal information. And what it will the consequences be if you divulge that information. Because that consequence will not just be for him as a person or her as a person, it will also bear a consequence for you as a business. And it is therefore critical for your business to understand what those consequences are and what you need to do to mitigate those risks and what rules or controls you need to put into your policy to ensure the implementation and the guidance thereof. Your expected credit losses. If it is not controlled and guided by your policy, it makes it so much more difficult and complicated. If a company is in business and there's a negative activity, then you understand what it's going to be. If a company is not in business, I'm talking about SUBSE, your registrar of companies, what is the status of the business? What is the risks attached to that? And what should the connotation of your expected credit losses be? Because if it's not clear and it doesn't guide, it cannot help you mitigate and eradicate. If you call for securities or want securities on certain levels of approvals when it comes to certain of your debtors, if it's not stipulated in your policy, it just makes it more difficult to control. It just makes it a little bit more difficult to implement. We're all steering this new activity of the banks in the face, where the banks are now starting to say that they are going to do away with bank codes. Some businesses place a high value on that. If you're one of them, and it is a rule in your business to apply for a bank code when you're opening a new account, How are you going to mitigate that now when it disappears? What are you going to do? Once you've made that decision as to how you're going to do that, put in your policy, update your policy, let everybody sign the policy, let everybody accept the new rules and regulation. Then you will have no questions afterwards, but why? It is because we as a business are guided by this. This is how we make decisions. Not how I, the credit manager, make a decision. No, it was a buy-in from everyone. The whole business have decided together, this is how we're going to mitigate our risk. This is how we're going to control our exposure. This is how we're going to ensure we collect our cash fast, quick, reliable. This is how we're going to eradicate our business of inefficiencies. 85% of the time, when you can't collect an invoice, it's our own fault. Why? Wrong pricing, wrong product delivered, no purchase order on it when we sent it out. The client tells you up front, do not invoice me without a purchase order number on the document. I will not pay you. What do? We invoice him without a purchase order. Now, I know, been there. Sales guys come and say, we're going to lose this deal if we don't invoice now. And then what we do? We invoice. And then what happens? The client doesn't pay us. Why? Because there's no purchase order number on there. If that is the rule of the client, then make it very clear in your policy that your team in your business should not break that requirement or rule. Insurances, credit insurances, they've got very strict rules and things that you need to abide by. If a debtor goes 60 days over their terms, automatic suspension of cover steps in. Put it in your policy. If there is a limit of discretion and they say this is the limit of discretion and this is what's required to approve an account within that limit of discretion, put it in your policy. Make sure that the credit policy takes every single facet of your credit into consideration. But in the end of the day, it must fit in with everything that your business does. I don't say make the policy to you in such a way that you kill your business. I say build the policy in such a way that it will encourage you and it will encourage your business to grow, but in a controlled, accountable, responsible manner. When that policy is there, it just makes your life so much easier as a credit department because everybody understands why you are asking for certain things. It's not because you want to be cocky or full of crap. It's because it is to protect the business that you represent. I was always of the philosophy, if someone comes to me and says to me, why are you asking for this? I would always say to them very easily and very straightforward, it is to protect the business. It's got nothing to do with me. It doesn't touch me personally. It's to protect the business. In the end of the day, if the business fails, you fail. If you fail, you're going to sit without a job. And one thing I can assure you of, the credit fraternity is that big. They don't remember all the good things you've done. They remember your mistakes. And everyone always talks about that. I know that the accountability that credit people has is huge. I always joke and I say to people, when day you die and you get up to the pearly gates, and St. Peter says to you, what have you done on earth? And you say, oh, I was a credit manager. He says, okay, you've had hell on earth, please come in. It is the most critical function in a business because it holds the client on the one side and it probably engages with the client more than sales or operations because it speaks to that client on a frequent basis, engages with the client on a frequent basis on various levels. It is also important because if no money is collected, no product can be built, no services can be rendered, no staff can be paid. a huge accountability and responsibility rests on people like yourselves and your team. And the more controlled it is, the more ruled it is, the more accountability there are, the better it is for yourself and your team. Because it just makes their life easier. You know, I'm sure if I could see your faces, you will all shake your head like this when I start saying, your credit controllers walk into your office on a daily basis complaining about the cowboy activities of the business. This sales guy has done this again, or this guy has done that again, or now I got to do another credit note because of this, or because of that, or client is not going to pay us because we did this, or this client's not going to pay us because we did that. Always a problem. The policy is then there to be the backbone of your business, to guide your business as to how and when what will happen. Makes it easier for you, makes it easier for your CFO, makes it easier for your CEO, and makes it easier for your audit team, and makes it acceptable and understandable for the shareholding of a business to know that you're in control of what you do. Understand the rules, understands the consequence, understand what it means for the business. Do you want to make money? Yes, we do. Do you want it to be controlled? Yes, we do. In South Africa, we have one big problem. Our debtors, they play the guitar. They dictate if we allow them. I hear it so many times when terms are given and your credit application is sent back to you and says, we do not do business on 30-day terms. We do business on 90-day terms. Sure. If it is in your policy that can be accepted or that the term can be overridden, as long as the margin speaks to that. It took me quite some time to get it through to some of the salespeople to understand that if you have a 3% margin on 30 days and you give 60 days, that margin will be eradicated by the time you collect your first money. Because of the process, because of the cost of capital, because there's various things that eats into that margin. So with other words, you can actually take the product, give it to the client and say, there, have it at cost. Have it for free. We'll pay you to take our product. All of these things must be very carefully noted in your policy, because that is going to safeguard you. It's not just to do with opening an account, who can sign off, who can do this. It's got to do about the whole lifeblood of your business. They've got this new terminology, they call it O2C, order to cash. Right from when the order is placed till the cash is in the bank. It controls that whole process. It controls everything that is done in that process. It stipulates exactly how things should be happening. It guides everybody, tells you what the outcome should be, but it also tells you what the consequences will be if that doesn't happen. Now, I know it's modern, you are talking and you don't understand the problems that we have and how we're chasing sales and how important it is. I know. I've been there. The minute someone doesn't want to sign a document with you, my question is always, why not? If someone says, I don't accept your terms, yet that same company goes to the bank and signs a pack of documents like this for a single overdraft or for whatever engagement they want with them, but they're expecting you to finance them for $1 million, for 500,000, for 5 million. I've seen some scary amounts on aging, and I've seen it lying in 120 days, in 90 days, and I think to myself, I will have sleepless nights if I had to have that kind of money outstanding and I don't know what's driving it or controlling it, or what rules I have in place to make sure that my debtor is going to pay me. Do I understand the risk I've engaged myself with? Is it controlled by something that guides my whole business and is driving the being of the business? Have the policy reviewed on a regular basis. I don't say a policy should not be adjustable. Certain different times needs for certain different measures. I think during the COVID period, the way we think was adjusted a little bit. I spoke with a group of people the other day and I said to them, it's not just understanding what your debtor does, but it's understanding what his debtor does. Because if he doesn't get paid, you might not get paid. If his debtor is in a situation where COVID has a different impact on him, how is it going to impact your debtor? And how is that debtor going to impact you? It is almost that you have to start doing their credit control for them, understanding how they engage so it makes your life easier. I know this sounds scary and hairy and like a hell of a lot of work, but in the end of the day, it is only going to protect your business. It's going to protect the way you do business. And it is going to help your business safeguarding itself against unnecessary risk. It should almost be called a credit risk policy and not just a credit policy, because that is what it guides and controls, is the risk that the business engage with people where they're giving them a service or a product on a specific term, and the minute it leaves your premises, the value of that product or service is out of your control and it's now in someone else's hands. And how and what are they going to do with that? Or how are they going to pay you? Or when are they going to pay you? Even if a client doesn't pay you, have those, what are you going to do about that noted in your policy? Then everybody knows what's going to happen. And even the debtor knows. Sir, if you do not pay us, this is going to be our response. We will stop your account immediately. And I know in certain instances, I was in the labor market. It's not so easy, but there's different ways to mitigate that. But make sure that it is, first of all, implementable, controllable, manageable, accountable, and there's people responsible. Everyone knows who must do what, when, where, guided by the policy. So, if you do not have a credit policy, I'm not going to write it for you. I can help you. I can guide you. I can give you assistance as to what, where, when. But your industries are so vastly different. If I look at the names of the people that are listening to me right now, that it's going to be very difficult for me to give you everything that you need to put into that policy. Your businesses think in different ways, because some of you are in a manufacturing role, some of you are in a distribution role, some of you are in foodstuffs, some of you are in other products and manufacturing environments where there is completely different rules and regulations. But understand how and who you're going to deal with before you engage with them. I always use it as an example. When one of my CEOs walked into my office and said, "You're never going to believe me what I did today." And I said, "What?" He said, "I just signed up this massive business in the mining industry." You can make your own assumptions of who I'm talking about. And this is the nice part. and they are going to pay us in 7 days. And I said, wonderful. But that's never going to happen. He said, what do you mean? He says, which part's never going to happen? I said, the payment in 7 days. He says, what do you mean? I said, did you build your margin on 7-day payment? He said, yes. I said, they're going to pay you 45 days if you're lucky. He said, what do you mean? I said, their process doesn't speak to that. Their engagement doesn't speak to that. So if you do not understand the risk that you're engaging with, how on earth are you going to control and mitigate your risk? Understand, control, and mitigate, guided by your policy. Thank you for listening. If you have any questions, please do not hesitate. You know where to find me. My contact details will be shared with you. This conversation was recorded, just by the way. If you want it, feel free to ask Fatima to share it with you, and you can contact me or us at Inoxico at any point in time to assist you, making sure that your credit policy is drawn up in such a way that it doesn't just protect your business, but it protects your client and it protects your environment and helps your staff. Eradicate your business of inefficiencies, protect your business of risk, understand who's accountable, understand who's responsible, give you clear guidance, assist you with your key performance indicators, and make your life easy when the auditors walk into your office. Thank you for listening.